Greetings, market rebels. Welcome to this week's macro measure video combined with the old trusty sector situation video. I'm Wayne, and it is about 10 after 4 p.m. here on the East Coast on Friday, October 4th. We just finished the week up, and we're ready to go. We're going to take care of this trusty disclaimer. We'll take care of our trusty intellectual property rights notice. And I'm having a real big battle with my computer again today, as you can see. And now let's get into the selector review. So double checking that, it did go a little too far. So let's just do the quick thing. Let me get this laser going to try to be a little more competent. Anyway, major aims of this video discussion, we're trying to keep it nuts and bolts. We're not going to go super complicated on various techniques. There's trying to use a lot of the most common, widely used techniques, so a lot of people can follow along, especially if they're new, and they're less time consuming than some of the more, I guess you'd call sophisticated techniques and tools that are out there. Anyway, the point is we're trying to really identify, more so than probably anything, we're trying to identify the market environment we're operating within for the upcoming week. Now, we do try to arrive at that at a news neutral, that's the NN asterisk. We're trying to assume news neutrality so that what do we think would happen, right, without a news development that would really shift matters. In other words, that's the most likely scenario to play out without news impacting the market. We try to highlight bullish and bearish risks. And I would say try to go to 2x and follow along, because I tend to try to cram a lot of stuff in just the way that I am. If you're new, you won't be too caught up. But other folks have been dealing with this stuff for a long time, but it's only really coming from the heart, trying to help out just from all the things I've learned over the years in the markets. Anyway, this selective review is, I'm going to leave all this there. I think all this stuff helped us to a degree. I just never thought that conversion process that I thought was potentially important coming in, that we would maybe back up to that. I didn't think that would really dominate the week as much as it did. We did have a slick initial pullback a few weeks ago. We talked about that, but we were looking for the market having gotten a little ahead of itself, slightly overbought or essentially overbought, just backing up and trying to most likely find support and see right at that prior resistance if it could convert that to support. And you have to say that at the end, it was a week-long affair, but they did pull it off so far, right? So I never thought it would last that long. There's a lot of things in here I'm not going to cover, but you can pause and you can take a screenshot or whatever you care to do, and then review those. But anyway, most likely scenario we talked about last week was right there. Take a breather, pull back to form resistance, see if the risk appetite persists. And it did, right? They kept coming in every time, and I'll show that on the chart. And bears had their opportunity, had their chance, excuse me, but bulls held control. So you got to tip your cap to them. I do think there's a little bit of the normal shenanigans, but that's why we call them the normal shenanigans. The news required to derail, that's been there for a while. So the trends being as they've been, and the price action unfolding as it has, we've continued to say now for, I feel like, months, that it's going to take news to derail this market. And so it would be concerning, maybe even more concerning, if no news had really occurred and the market was becoming derailed, because that's often something systemic that starts to impact, and the smart guys that are closest to the situation, if you want to call it that, they sniff that out first, or they're aware of it first, and then things really get ugly and folks wonder why. This is really a bad day, what's going on? And then you find out later, and it's usually bad news, and there's usually more of a follow through, followed by a cleanup operation and bounce, and the rest of it. But anyway, market environment, a little less volatile than I thought it would be, because we kind of stuck around near that critical former resistance, now potentially support area. I still think we're in the window of do not get comfortable. And I do think you could still have a squeezy melt, because a lot of people, I think, feel the way we do, and they've seen prior Octobers, and they see all these potential risk balls that are in the air right now that could come down and land on this market, but they're not. That hasn't happened yet. that's where the rug pull, of course, would come in. Otherwise, right, because a lot of people feel that way and there is complacency, I think you could end up with this squeezy melt where they just get this thing goosed, really, which would probably be not very likely from a historical perspective, which could really, again, have a lot of folks on the wrong foot, which is what the market likes to feast on. Anyway, the risk appetite was there in the end. They absorbed a lot of selling in near the SPY 565, 566 range that we talked about last week being potentially important. And then, as they're often want to do, right, they took a news report that was dubious. If you look into it, very dubious, expected to be, expected really at a pre-election time like this. But the market wastes no time looking at the details. We know that, and we know that the revisions come later, almost like Swiss watch precision. But it doesn't matter, right? That's been the way it's been for a while. So don't hold your breath if you're thinking the market's going to see how bad it was or how overstated these jobs were. And by the way, they were all really unfortunately, they were government created to a large extent. I've got some information on that. I'm not going to go through that, but you can look it up on Zero Hedge. It's not good. Anyway, so the Bears had their chance, but they just couldn't get it done. It looked to me like that spidey sense concern was something was about to unfold. It was the feeling I had, but it never did. Bears could not crack the 565 level in SPY. The Bulls held control and they put the squeeze together. And then once they had this morning, it started, of course. And once they had them on the ropes and there was no really heavy, there was a heavy sell off actually, but it closed the gap I think it closed the gap that it may have left. And then they kind of spent the rest of the day frustrating the daylights out of Bears. And then they ended up, goosing it into the 4 o'clock bell, East Coast time. Anyway, the XAU mention we had last week, we said that still had big picture potential, but we said it was hesitating near the highs. And I think we said, it was probably due for I think we thought it was due for a little bit of a potential pullback. I think I talked about that I think I talked about that maybe the week before too. Kind of got a little toasty. So we'll move on now to this week's coverage, which is very similar. So I'm going to leave all this up here and we'll go through it. But I really want to try to start mixing the charts in as soon as we can. I think it's a very interesting time, honestly, very interesting when you look across the panoramic view of the markets, a quick one anyway. I still have the spidey sense thing, even though it may sound contradictory. I feel like there was a lot of opening higher and selling into, but so there were players out there that were selling. That could be our hedge fund friends that are often too early. But most of the last few weeks felt like a lot of selling once these guys open. But when they get near support, that's where the bigger players, or you want to call them the smart money, the deep pockets, whatever, they've absorbed that near support. And they did that all week long. So I think it's kind of a weird thing, but I kind of feel like I saw some distribution. But on the short term, the liquidity providers, AKA dealers, AKA market makers, they seem to absorb that and then use today to mark that up post-absorption, which is what their job, and that's what they do and what they do well. So on that note, let's stop the share briefly. I'm going to move my notes to another screen if it allows me. And then we will get some charts going and I'll start talking about a few things here. Oh, geez. So just bear with me here. It looks like I'm having a little bit of an issue. I apologize. Something must have happened. I think I mentioned I've been having some tech problems, and unfortunately, Thinkorswim looks like it may have gone ahead and crashed on me while I was getting ready to record, and I didn't realize it. So just let me take care of that. Should be able to log in a second. It'll take a little while for everything to load, and then we'll get going. But I'm going to move this out of my way over here. I'm going to start broadcasting my screen number. Should be screen number, let's see, 4, screen 4, share. And what we could talk about first, since I'm kind of out of my element without my charts, what I wanted to mention here, well, let's take a look at starting over to the left. This is probably one of the highest readings we've had on greed in some time. I don't, let's check the timeline. Yep, well, I'm pretty close, right? So 74 today. It looks like we had that a week ago. So yeah, these are two of the highest readings we've seen in months. So this market does have that greed feel to it. You can see where it closed. Probably not right an immediate, hey, just short the daylights out of everything type of a situation. But at the same time, right, we know that when we get into this, you've got to keep your eye on it. I don't think AAII survey spiked, which is probably helpful for bulls, right? That you're not too high there. We did note that it got up there a few weeks back and was very quickly got right back to kind of overbought complacency level. But I think the hedge fund gang, from the stuff I've been able to read, the hedge funds have done their usual where they're a little too early. So let's see here. This should be showing here on TradingView. What I wanted to bring up is the put call ratio. So this was very low, really to end the week last week. This was very low, and it's finally starting to rise. So you kind of are, in a way, coming from a complacent place, right? Not too long ago. So just keep that in mind. Another thing I would keep in mind is that that's not it, and that is not it, and that is it. Okay, so the other thing I'd keep in mind is that let's see if I can spread this out a little bit here. Why is this stuff popping up on me? I don't want that. I don't want this stuff over here. Yeah, I'm trying to figure out why I'm getting so much stuff that's in my way here. But this is SMH, and this is, I'm using another piece of software because I'm having the issue with Thinkorswim. But this is very interesting to me because we talked about, I don't want to even get into it. I'm just going to sort of draw across it here. I don't think I can use any drawing. Yeah, I don't know if it'll let me annotate this way. Maybe not. No, I'm not getting good annotation. Well, maybe it will let me if I just sort of draw like that. Get the idea, I think, if you could see that. But that's all I'm getting at there. I don't want any more annotation. Okay, it'll stay there for now. But you get the idea. So if we broke down below there, we were talking about a much more clean support line during the week. I think it was on Monday. So this is really what I'm finding interesting in starting out with, because this is such an important area in my mind. And this, along with XLK and XLC, were not really reclaiming their former leadership position. And I've been maintaining that I think for the market to really go, that has to happen. And they had some weakness here, and it looked like, right, you could see how it found SMA support, right in there. I'm not really worried about the level so much. It's more just the overall visual picture here. So false breakout right there on this day. They reverse it down hard. We notice it. We start saying like this could be a problem. The market and SMH are problematic through the middle of the week from Tuesday through Thursday. And then, right, they pull off the nice maneuver here yesterday. I think they were using NVIDIA to an extent on that. And then today they get the short squeeze going on the dubious jobs numbers. So this is very interesting now because you came back into the triangular consolidation that you've been sort of affected by now for a few months, but you now have bulls reclaiming control, and it's early in the cycle, right? It's not, in other words, it's not really anywhere close to overbought at this point. You could probably see below down here on the RSI that we're only at like 57. So you're really in the middle. So you've got plenty of sort of room to run on an oscillator basis before you get anywhere near overbought. And what's interesting is, right, you could say, well, this doesn't look good. This was not a great candle today. This thing could roll over again, and it could, and you'd have a lower high in, and you would, right, and you'd be challenging the same low very quickly, not normally a good sign. But at the same time, you could say, as I'm going to say, you could call this what I call the base camp, which a lot of folks that have been with us for a long time know what that means. All that really means is that you had this attempt to run and gun through. It was really getting long in the tooth. It couldn't be pulled off because by the time you got there, you were getting towards overbought. So you see this sort of pullback, but that puts in a higher low versus the prior lows. And so now when you try to launch your assault on breaking out, you're a lot closer to resistance, and I think have a much greater chance at being successful as a result. So you have to keep your eye on that. Again, if you ask me, we always talk about NVIDIA because it's really it's the darling of the day. You have to always, from my experience, you really have to keep your eyes on that. And this thing is also moving back up in a similar fashion. And we should note that on both of these, right, you can see that the long-term uptrends are still intact. They just are. So there's really nothing there. This is really a consolidation inside of what's still a longer-term uptrend. And you can see that there's an ascending triangle aspect to this with the higher lows getting put in. And so you're really close now, again, right, to possibly breaking out, challenging these highs, and maybe closing they actually may have closed that gap already. And I'm just a little short on space here on this stuff. But again, like, my apologies for that. I'm just so used to looking at all the stuff that I look at, and I've got different layouts for different things that are not always something I have to go to, and sometimes they are. They're there pre-built, so I don't have to waste time thumbing through like all these indicators to find what I want, change the settings, blah blah blah. But anyway, so I'm sorry that it's a little messy, but the bottom line remains that this is an uptrend. It's a long-term uptrend, and you would assume, right, the presumption is that you break out to the upside because you're still in an uptrend. So once this consolidation resolves, you get something. Now, we talked about this 2 weeks ago, and we managed to get some UA, and we were looking at this triangle, which I don't want to draw, but I'll just sort of move over a few times for you in there. And then that triangle, there's a larger triangle that triangle was within. And that sort of launched this pop, which was a nice little trade, but really, obviously, it wasn't really the release of the whole thing. It wasn't the conclusion to this consolidation yet. You're sort of still mired within it. So it's very interesting. If you're new, the best thing I can tell you about this is that even though this is the most boring thing, I think you should understand how, as simple as this is, how important the next technical development is, because that could determine a lower high, which would turn us potentially bearish if support gets broken, which is probably really this week's low, or it could be, right, a breakout very easily. So it frustrates a lot of people, I think, when technical traders say I'm bullish or bearish, and then the next day they change their mind. But that's because, right, there's new price action, new information, and the market's very dynamic. And I think if you think in those terms, if you're new, that you're just looking to be opportunistic and you're really not beholden to being a bull or bear, you just care where there's potential momentum and you care to glom on or latch onto it. That's, if there's a secret when you're new, it's not picking a direction and being willing to trade on both sides of it. So I just wanted to say that because, well, I think it's true. I think it's very true. And I hope that helps people that are newer, because the impression I had when I came into the business was that I better become a bull or a bear, because that was really what was customary. You form this opinion through your analysis, and then you take that position, and that's fine, but it gets your ego involved when you sort of force that. If you're willing to be conditionally bullish or bearish, I think you're way better off. Having said that, let's go to the mega caps. And the reason why, come on, it's not liking me adjusting this for some reason. I don't know why this is happening. Let me see if I can just get us to, let me just see what I can get us here. I really don't know why it's giving me such a hard time on just, on not being able to spread this stuff out here. I may just, it's not letting me, oh, there it is. Let me try to hide this real quick. I'll just get rid of that. See if I can pull this down. Maybe now it will let me. No. Well, let me see if I can move it over this way at the very least. think the computer and the software are fighting with me. But this is what we've been looking at in terms of the mega caps. So as a package, and you can see that I've got them. You can argue this one should be in there too, that one shouldn't be in there, or whatever you want to do. But you get the point. And we've been saying that these are kind of holding the market back a little bit. And right now, they managed kind of a little stealthily, I think. They're really within striking distance now of taking out or at least challenging the highest high that we can find. So just keep that in mind that you've got the semis with the base camp. You have the mega caps with a base camp. You've got the former leaders now that are also with a base camp. Here's your XLK, right? And then let's look at XLC, which is even better. And so these things are potentially going again. And that, to me, is what allowed them to pull off this nifty little trick. Where's that nifty little trick at that I wanted to show on here? Let me try to pull this up. And I'll pull it over here. I'm just going to stick with this basic. Remember, it's combined videos, folks. So don't shoot the combined messenger. But if you notice, I'll try to make a few of these larger. A lot of things that were doing well, the kind of replacing, if you will, all the charts we just talked about that were former leaders. A lot of these, right? They were on their way back down. They were finally taking a little bit of a breather, rolling over. They did recover a little bit towards the end, but you could see like this block of 6 didn't really have that wonderful of a week. These two here, XLRE and XLV, did not have a wonderful week either. But you didn't really do very much in XLF, but you did finish, thanks to today's squeeze, on a high note. Okay, but overall, these 9, really not a great week for those. Some of them were weaker than others. Some of them really kind of rolled over hard. But if you notice what we just covered, right, here's your XLC, lower left, just above that, XLK in the middle here, right? You can see how they're kind of stealthily moving this back up, higher low in place, very easy assault could be launched to then maybe close the gap that's back there and then maybe get there if they create, another leg to this squeeze. And they've got, right, this nice participation in XLE finally. And I don't think it did it on its own accord, but it doesn't really matter, right? There were a lot of great opportunities in there. I'll try to show some of those real quick today. But yeah, I mean, there was just the news put things in motion. We saw UOA just hit. There were many, many hits in this space. And so when I see a good looking chart, a catalyst, and I see a lot of ostensibly bullish UOA, that's one of my favorite things to see as an editor, in the UOA newsletters, because those really are some of your safer plays because you've got a lot of company. So it's institutions just kind of all seeing the same thing and getting involved. So you have your institutional support, and it shows up in the stock volume sometimes, and shows up in the UOA, it shows up in the price action, and there you have it. So, so they really did sort of take a breather, kind of rotate a little bit out of this. And it seems like the gang rotated back into mainly, right, XLK, XLC, and those mega caps. And I think we even talked about that last week. So again, not like a, hey, look at us. I'm just saying that we said if they started to do that, right, on any weakness, they got back into that could really help the market. And I think it did help the market. Let's see if we can come back to this. Let's see if I can get a chart here. Why is that blue line still there? I thought I got rid of that. Let's see. I don't know why it won't. Is it going to let me dump that? No, it's not letting me dump it. Please just ignore the please just ignore the blue line. Let's get us to a chart that's easier to read than this one, though. This one should do it. So forget the blue line. Why won't that disable? I thought I clicked on the erase, but let's get us to SPY to keep this simple. So, and I'm going to try to, this is fighting with me too. Everything, I think I have too, honestly, like it's probably my own fault. I just have too many things running so I can look at a lot of different things that at times I need to, at least I perceive that I need to. But see, this is really a good picture. Sans blue line. Where disable annotation. Where is annotation? Nope, it doesn't like something about the annotation. I'm not seeing like where I can get rid of this, but so I have to just let it sit there. It won't show me the other menu. Anyway, you can see the purple line, which I'm about to highlight. It's now blue. I'll return it to purple. That's the one we've been working with, for a while, really, since we saw this and then these highs just beneath it. So you can see right in here, Tuesday through Thursday, these were all really right about there, right? And this was our thought coming in that they might take this down, see if they can convert this to support and from resistance now that they're above it. And that's that slick little instant conversion right there. They did do that and it held. And if you look at it really more like on a 5 minute, you'll see, if it lets me show it, you'll see, right, that there were many, well, maybe I should do 10 minute to get us a little bit better of a weekly view here. But you can see it all week long, really, this thing after Monday. You were pretty much visiting it all week long until today's gap. So there were many, many visits to that 565, 566 range, and they just wouldn't let it crack. And you got to tip your cap to them that way, where it's reflexive. Sure, you could say it's Pavlovian. Some people would say it's stupid, but it may be all of those things, but it worked, and that's the bottom line in the end. So Ryan noted on Cocktail Hour that hey, there's in the end you got to give the bulls I'm still bullish, right? And I think that's where you have to end up right now, because they did hold. Remember, we assume news neutrality so that we can be objective about the charts, and they did hold and they moved it back up, and they're just literally right, just a less than 2 points away from a new all-time high in the S&P, or the S&P 500 ETF. So it's pretty hard to say anything really bad about it. There's little things I can have gripes about, but in terms of, you wanted to say, well, what about, hey, what's going on with the market breadth? And didn't you just see all those sectors that really aren't looking that great? That's all true, but the sectors don't appear to be dire to me. And if I look at this market breadth screen, we look at almost on a weekly basis. Would I like to see some things looking a little bit better? Sure, but it's not really dire, right? There's no massive divergences where it's like, oh, this is just a matter of time before this thing starts to crumble. I've seen those many times in my career, and I've been ready for them as a result, if they're not even hard to spot. But this isn't one of them. So I'm not saying that means it's a guarantee we go up, up, and away. It's just that if nothing really impedes upon this market in terms of news, I think it's, even though the seasonality says the VIX should spike into mid-oct, it might not, right? You might have a breakout and then a massive reversal that could cause the VIX to spike in the second half of October. You just don't know. You can't just, the thing is, I think that relying on this seasonal and cyclical patterns is something that's important in terms of preparation, but you can't really believe that it's the absolute script each and every year or each and every season, right? The market's dynamic, there's variations. A lot of the human nature stuff does play out time and time again, but it doesn't play out like perfectly like clockwork all the time. So overall, right, it's pretty hard to say anything atrocious about the market breadth right now. It could be better, but it's not showing anything glaring to me. And like I said, when you look at let's go to the sectors again. When I look at these sectors, right, you could say, well, this is a concern of mine. Look at this. Well, XLV is a defensive sector, and XLP is as well. And those are the ones that are probably looking the worst, right? So what does that tell you? It tells me that, right, they're kind of getting away from the less volatile stuff, and they want to go into things that they think are going to perform better, mainly the former leaders, right? And we know they've been going after these other things. Remember, too, we've been pointing out, and this has been going on for a long time. Let me see if I can bring it up. But just remember, a lot of these things get sort of like lost in the shuffle because we cover a lot each week. But And so it's sort of like, oh, Wayne's got the same bullet points. He's lazy, but no, I'm leaving. I am even we. Let's just say I am lazy. Not leaving them there for that reason. I'm leaving them there because I think they still matter, honestly. So, right, you can't lose sight of the fact that there's a global easing synchronization happening in theory, and that's essentially another way of saying the Ponzi scheme is about to rev things back up again. And we also know that everything, including the kitchen sink, is going to come out to support this market with an election so close, right? By not just this administration, but any administration. So all those things do matter until I think news would knock this market off the rails. And that hasn't happened, right? That just hasn't happened. So they can maybe credit the dock workers coming back news, but they set up a great squeeze. They absorbed, right? They absorbed all that selling all week long from Tuesday through Thursday near that critical zone in the market. And then they got the news that they wanted, or was it news they knew about, or was it news they expected? Who knows? I mean, probably insiders probably knew that there was a little there was a chance that something was going to happen on the positive side with respect to the East Coast dock workers, well, the Gulf too. So anyway, you get the idea. I think overall on that. So you can't, as much as we're concerned mainly about risks being overlooked that are bearish, that are concerning, that result in potential rug pulls more so than bulls in most cases. The reason for that is not because we're perma bears, is because we feel that the media does a great job of cheerleading on Wall Street, but they don't do a great job of covering the risk side of the equation for investors, right? They're always encouraging, we think, from our perspective, that people should just keep their money in the market at all times, and that's the only way you can win. And I don't think that's right. Not to say that it doesn't work, but just to say that I think you should inform folks about the risks that are brewing as well. So having said that, let's get back to the charts, and I'll try to move this out of my way again. We'll get to more of a basic chart again, if I can, right here. There should be one, and that's that. So if we go through the big four, so let's cover, before I do that, let me cover this. So yeah, I would, if you ask me, I'm coming in as a bull. I'm coming into this week as a bull. I have to say that I think it's the most likely scenario. Remember, assuming a news neutral, right, opening on Monday, I think the most likely scenario is they try to run and gun this. I do think that they're set up to do that. I do think this is a fresh bull cycle, right? They haven't had the baton, so to speak, in their hands for very long. So there should be plenty of energy there. You're only at 62 on the RSI on this view here. So you could easily pop through. And where would I put that? Probably a resistance level up there. But I think this 581 level, 582 looks right. And would I take the trade if they're breaking things out? Yeah, I think if you get back above the close of 573, 76, or if you want to wait for that new high, I think I would buy. I mean, I would be happy to go long there. Again, assuming news neutrality. The reason why is there's a lot of people that were probably waiting for this test just the way we thought it could happen. We got it. The bulls have succeeded in holding, and they have it moving back up ever so slightly again. So a lot of people are likely going to be technically encouraged, I would think, from this. And then they might say, hey, look, this thing's going to go. Now, this could go from sort of an ascending triangle-ish look to more of a ascending wedge. And then you get to the upside of this wedge, which we would probably have to extend this or modify that line to help us out a little bit on that. But if you get to the upside of this, then that, is bullish as that is to make new all-time highs near 600. That's potentially not something a lot of technicians like to see. A lot of people like picking fights against sort of like rising wedges. But, again, I don't even want to get into that. I don't look at it that way necessarily, but that's how some people do. Anyway, that is that. So I think, I would be a breakout buyer there without a problem. I don't think you have to worry too much about anything until you're below the 20. Right. I think as long as bulls are not in the proximity of the 20, right now we may as well use that. The rising 20 there, it's at 565. What a coincidence, right? I wouldn't worry about it because but that is a big deal to me now, right after it held so well. If that were to sort of, if we were to come in and there's news that's like pretty sour and you're right back under pressure, you switch to the lower high mentality, break down, looking towards the 50 down here, the rising 50 there in gold, which is 554. So you're not talking about a great trade. I mean, you're talking about fighting against the trend, maybe getting 2% pullback at that point. Not to say there can't be more, but unless there's really bad news, that the 50 should cushion that should be like a shock absorber on the way down. So keep that in mind. So that's that one. Let's look at the Qs. The Qs are similar, right, to the SMH and the megas charts, but not maybe quite as good as the megas, but right under the former high here, right? And there's just got to come back here. It seems like they closed that gap. I got to get rid of that. That is no longer, that little gap there is no longer a good reminder since they took care of it. I don't want to clean them all up, but you get the idea. These were in place for another reason anyway. But anyway, on this one, right, you can see you're at 50, I'm sorry, 60 on the nose pretty much on RSI. So there you go, higher low, right? Bulls back in control. It's a fresh bull cycle. They're holding on, et cetera, right? So I think, again, I'd be willing to trade this thing breaking out. You could say you want to see that that up close there. It's the best up close we've got to work with. It's nearby 488. I mean, you're pennies away and nearly 500 point ETF. So that's going to be easy to surpass. Whatever you want to do. Again, 20 day. That's where the last week's low is anyway. Looks like there's a flat line right near there. That's 477. So you're about 2% away from there really being trouble. I think it would just be considered relatively mild pullback until then. The diamonds, right? This was another just ridiculous thing, but that's what happens when people think something's going to break and bet that it is, and then they get news, and then people wait to cover. Then you have this sort of like late recognition that I'm screwed. They're not going to let this thing drop, and people have to go in there and cover. And that's why you often will see that very late scamper into the close. And what I mean by that, I'll try to show that. Probably shows best on like a 5-minute. You can see right here you are. What time is that? 3:15. The breakdown's not coming. People start realizing this breakdown that I kept thinking would happen all week is not coming. They're not just going to fully fade this bogus jam job, and they just go right ahead and goose, pretty much into the last bit of the trading session and hold it there towards, really towards the high that you saw earlier in the day. So that's what you got. It is what it is. You can say that it's BS. I know a lot of people probably think that, and I probably would agree with a lot of their points. It's just that I got to go with the technicals over anything else. They're the things that lied to us the least, in my opinion. But did we get an all-time high close, 423.12? Yeah, it looks like a new all-time closing high, right? So again, might not be the highest high, but you're less than 1% away from there. That's not a problem. That's not even 1% move. That's routine for these guys. Much higher low, bounce off the 20, really kind of like ideal behavior, ideal pullback. You come out of overbought or near overbought, you cool things off a little bit, and then you're at 57, you goose it up to 63 on today's RSI, which means there's still room. So, where do you think this thing goes to? Fibonacci guys, pattern guys, whatever you could draw. You can be an old timer and draw a line like that. Other old timers are going to draw a line like this one right here. They're going to connect that because some people are going to like that one. Some people are going to hate it. And then you're going to have another one somewhere in here. And you'll get argument. I mean, I've gotten arguments from people on why every one of these lines is good and bad, but I've tried to do a best fit thing. I'm not going to go through all that right now. To me, right, the idea was going to put you somewhere up in here if this thing does pop. So you're going to be right near that 43 area, I guess, right? It wouldn't take very much to run to the 43 area, I think, from a resistance line basis before you hit anything. So I guess that would be 43,000 on the D, right, on DJX. Let's see what that comes out to. Oh, DJIA, sorry. I don't know what I'm thinking. Oh, wait a second. Think or swim, I forgot. Yeah, I'm sorry. I'm not even gonna go into that because there is a way to get the actual index, but we're just gonna have to stick with DIA. My bad. I keep forgetting they don't do that on this one. I can't remember what it is on this for some reason. I don't look at it that often because most folks want us to cover the ETF so they can use the levels. But anything, pretty much anything here, above today's high, you're a buyer, and you may as well again wait for the 20-day there, right? So why do you want to sell right above the 20-day unless there's news, right? If you think there's a news driver that justifies that, it's a different story. But if it's just down and you're like wondering why we're down, it's no big deal. It's not really hemorrhaging lower. They're just working it lower, maybe to pick up more inventory. It's kind of maybe one last test of that area before they goose. That's what I do. I think you need to crack the 20 to really believe in that. And even the IWM, which was probably under the most pressure overall, they managed to resuscitate that as well by the end of the week, and you're on a 54 RSI. And after really this long, relatively long pullback, which is really healthy, finds support right on the 50 there in gold, and then gets above the 20 there today. It's nearly above the 10 and the 15 for the chart those. And yeah, I mean, you're right. You look pretty good now. This would be another opportunity to run to here. This has been the 225 area. We identified it as being important a long time ago. Even I think I think it was even important before this, but at least back in this area here, and we've been sticking with it. And I think that's the big area. But yeah, this thing to me looks like it's got a chance. Again, news neutral. Bulls really get a hold of this. The problem is, though, and this leads us to, and I don't want to abandon this too early, but this leads us to an important thing we need to cover. So I would buy that on the breakout above the high. Once again, I don't even like selling it below the 20 there in light blue, which looks like it's about 217. The breakout's about 220. But yeah, I would, the reason why is the 50s right there. But if you want to take the trade and then if there's news, it's different, right? Then you're like, okay, well, I don't care the 50s there because I think it's going to get shredded too. Different story, but this thing does observe the SMAs. You can see that, right? Look at that 100-day. Look at the 100-day here trading all around it. You could get the idea, right? It came back perfectly to the 50, bounces from there. All these things end up mattering. This thing's been the mess. It's the laggard. Remember, this is the thing we point out. This and XAU, I think, have some of the best potential on the charts in terms of big picture patterns. And this one's just lagging behind its peers, and it's also just way undervalued relative to the inflation that's been priced into the other major index ETFs. So we've got this thing trading 270, 280 if it can finally get above, I think, 245. So, but it's got to get above 225 and then above 229, let's call it, on this chart to even start thinking about that. But it does have the higher low. So again, news neutral, fresh bull cycle, maybe worth keeping your eye on. At some point, if they really keep pushing the rest of these things and people, there are no negative news breaks, I guess eventually this thing's going to bust its way through. It's probably frustrated the hell out of a lot of people taking its time to do it. But what I wanted to show is this. I wanted to show what's happened this week in yields, because there's been this great excitement about rates coming down sooner, and I think it's going to be 2% lower by the very near the start of the year. Oh, I forgot. That's right. Another thinkorswim switchover has got me. I always forget that because I'm just so used to it out of habit. But they made a change on that. But this really picked up. We've been calling it sort of dormant near the lows, but here's yields moving up. These things are almost up 10% from the recent low. So read into that what you will, but this is where I think, this is not good for IWM, and neither is probably this for stocks in general, right? That the dollar is screaming back up again. And we said, we just rhetorically, what if this thing really starts cratering to the mid 90s? But now, right, it didn't happen. And they're jamming this thing right back up pretty big. Now, it probably is reflexive, right? That you just get this, it's sold out. No one wants to sell. They probe new lows. There's no sellers. They reverse it. They go. Very common. But usually with the dollar roaring, that usually doesn't help stocks. The opposite normally helps stocks. So this probably put a damper on, not, it probably could put a damper on stocks if it keeps going, but so could XAU feel the pressure from this dollar too. Usually there's a decent inverse relationship there as well. So I was a little frustrated in my GDXJ this week because I had a snafu when I went to make an adjustment. I have a diagonal on. I was going to uncap it at some point, but I decided they were probably going to pull something back here, and because they started to, and I thought, yeah, this probably could pull back a little bit more. So I'm going to be smart. I'm going to buy back the 53 calls for virtually nothing, like 1 penny, and I'm going to sell the 51 and a half calls. And the stock was, I should say, the ETF was still up there. I forget where it was. I want to say it was maybe it was on Tuesday that I was doing that. I can't remember. But the point is, it was down. It was still at near 50. And I'm like, yeah, I'll do that. But I had a problem with the software, couldn't get it done. And by the time I finally got back to it a little bit later, it just, you could see what happened the rest of the week. But it's not the end of the world because I'm okay with that. I wanted to write something for next week towards the bell because I was pretty busy today. We had cocktail hour, but I couldn't get it. But me trading around diagonals is what I like to do until I release that. My plan is to let it go completely unencumbered with just long calls that I prepay for with my diagonal shenanigans. But I don't want to get too far afield. Let me also share this other kind of interesting thing here. This is something that I can't add to UOA Pro. Just want to mention this because there's a pretty significant short ratio. There was UOA, and you can see that there's a stock spike in this Voyager Therapeutics. So you can look at its float is not enormous. The ratio, I believe, the short days to cover is about, I want to say it's like 11 or something like that. So I can't pass this out because the options liquidity is not there. But it does have little uprisings from time to time. So I just thought I'd mention that as a little bonus for people that stayed awake, because that is something you may want to look into. You'll see right here when I look at the options, this is why I couldn't put this trade in for folks right away. I was like, what am I going to do? Even this was a really bad market. They ended up, it looks like they ended up tightening that market up finally. I probably would have glommed onto those if I'd seen those, but I didn't want to go too far out of the money with these. I really would have preferred to get a little more time, but it's very hard to try to tell people, yeah, go in here and buy this one. These are just horrible markets. Anyway, so that's just a little mention there, really more so than anything else. I should go back and make sure I cover a few things. Yeah, let's take a look at the VIX on the other chart. So this is another interesting point to me when you talk about the entire mix that we're in right now. And normally, right, when you're just literally you're a few points beneath all-time highs in a few of these things. And you're in a period where the government, the administration should really be doing everything. Rates are coming down, but the VIX just wouldn't quit this week. I mean, somehow, right, the VIX managed to be up on the week. Remember, I'm long the VIX, but I'm just pointing this out that I've got a spread on in there anyway. But I just want to point out that, yeah, this retreated today, but they do have it up on the week. Last week, it closed on, why am I getting, yeah, so wait a minute, 2, 3, 4, so right there. Yeah, so it closed at 1696, and even despite today's ugliness there, it closed at 1921. So this is elevated quite a bit from the lower teens, right? It's a lot closer to 20 than it is to, let's say, 12 or 13. And given that, that tells me that the spidey sense type thing, the seasonality, all this geopolitical stuff, we have company in terms of our senses of that. I've also read some things that suggest that the VIX is underpriced versus other instruments that trade mainly from professional to professional. That there's a lot more, I guess, risk speculation out there than the VIX would show to our eyes right now. So it's maybe that's one reason why it's elevated. I don't know. Maybe someone's got a hedge worked out, believe it or not, on something that's over the counter and they're using the VIX. I really can't say. I'm not on those trading desks, but I do think that this is interesting that this thing is staying here. So I think that's telling you something, that you managed to stay above 19 on the close, well off of where this thing normally trades when the bulls are starting a new cycle of control, barely off the highs after having some corrective activity take place this week in the form of the pullback pause in the action that we saw. So keep that in mind, because if you add up what we just looked at, you add up these, oh, did it again, I have it, sorry. Let me get the TNX. You add up the 10-year yield, right, jamming, you add up the VIX, you add up the dollar jamming, right? And then you add up the put call starting to percolate back up after being sort of super low and complacent about a week ago. There's something out there, right? That I think that could, well, let's put it this way. There could be something out there. There could be something out there, but what it is, I don't know. You know, I feel like we have company. We're not the only ones sensing this. Maybe people actually know. We're, of course, never going to be those people. We're not part of that mix, but I just wanted to emphasize that, because you don't often see the dollar jamming, yields jamming back up. There's some people talking about how with what the Fed's done, they're just going to invite inflation all over again. It's going to surprise people when everyone's geared up. It could take some time, if at all, that manifests, though. But this is all the stuff that's sort of running through my head right now, that I'm starting to get concerned about, but I'm not in a panic mode. I just feel, though, that we are really in the next really 6 weeks of time are going to be potentially very volatile because of the world and domestic situation that we're in right now. I don't think it's a pretty one, and this is not uncommon for the market to just walk right past all of it on its way to a new squeeze that could potentially develop in front of a rug pull that would be very much out of the blue, which is why our notes are our notes. You know, we've got some of this stuff listed and we've been waiting for it and kind of trying to warn ahead of time. So let's just make sure that we've covered virtually everything. I know we covered all these things. We covered the XLE, all those things. Let's check here. Yeah, we just talked about that. I talked about my diagonals, talked about the plan to roll up and uncap. So look at it this way. If I can, what I like to do, right, if I can make some money managing a diagonal, and then the trend goes my way as well. So I collect on the short upsiders a few times, and then I make some money on that downside. I mean, sorry, the in the money calls that have high delta that I'm riding, right? So I have a nice little situation developing. Then, right, when I'm really facing something uncertain, but I'm not sure what it is, and like, which is this case, what I try to do is make my money ahead of time, and then I'll just get out of everything that I had on diagonal wise. I'll take my winnings and put those into as many contracts as I can get on some kind of an upsider in the VIX, some kind of an upside call. And then, right, it's money. Yeah, you could say, well, that's your money. It's not House's money. Agreed. Technically, it is my money, but I do feel it's prudent to have on that kind of an uncapped hedge in the VIX and a potentially uncapped hedge in the metals, you know, which I have a lot of different things. I've mentioned that before. But anyway, that's what I like to do, working my way towards difficult situations like I think we may have on our hands. And I'll be fine with living with the fact that, you know, I made all that money, and it's okay if I give it back because I needed to have a hedge on. So at least, right? At least the hedge that I bought didn't really cost me anything of my initial capital when I started the process, if that makes any sense. Anyway, there's all that. These are all rehash, right? All these things are rehash. There's the jobs, I did make a mention on that, but you can go check that out. You're not going to like what you see if you go and check out that story in terms of, and remember the jobs thing is they've been revising these things down consistently, right, for many months in a row. You shouldn't, right, you shouldn't be able to get away with that. But as I've said, every administration, every succeeding administration seems to be able to get away with more and more. So I would expect the next one to get away with more than this one, which got away with more than the prior one, which got away with more than the prior one. And it doesn't really matter which half of the uniparty is in control. They all play games. And again, you want to have a serious conversation about anything, it's pretty hard when you're fighting over bogus data, right? That's not really helping a real discussion when the argument is over bogus data. But that's the country we have on our hands right now. Anyway, I would stick with this roll. I still feel like there's things lurking. I think the VIX acting the way it is right now, along with the dollar, along with TNX, that could all be, right, people off sides that were over bet, pressing their bets, getting smoked on reflexive pops. But the VIX really isn't that. I think there's people that are just seeing the potential for problems the way we do, based on research, based on global developments, based on domestic developments, and they're just prefer to have a hedge on, even though it costs significantly more than it normally would. But that's because a lot of people want it right now. At least that's the bid. My most likely scenario, if you haven't guessed, which I think I made clear, but I think they try to move this market up. The bulls held. There's a conversion resumption buyers, like we talked about a little while ago. They could be piling in if there's no news. And like I said, if there's no news and we're going down big, that's potentially worse. But if no news comes out, I think this market just goes higher for now, right? Until I learn more about the price action. But be prepared to pivot because, again, things that look good, if they don't seize the day, so to speak, early this week, upcoming week, then you could have a lower high put in. And if you roll back over and you're right on support again, that's not a good look for something that should be acting bullishly, we think. You've got this one, still think there could be a squeezy melt, followed by a rug pull, or just a rug pull if the news develops quickly. I still think a lot of people don't appreciate all this stuff, but I don't want to beat that horse. I'd still be at DEFCON 1, which is weird because I don't think we're in terrible technical jeopardy, nor are we close to, the line in the sand. We've gotten away from the key line, by 1.5% in terms of the 4565 level in SPY. I just feel like you have to be at DEFCON 1 to be super nimble about, hey, what's going on in this market? Have a hedge when you're riding something to the long side. If you are, have your hedge or your out or whatever, ready, and be disciplined about it. Because like I said, I feel like the window of something happening is very, very much upon us. Let's see. And I think that's mostly everything. There's a lot of things out there that I don't take the time to cover anymore. There will be a time when we get back to doing a lot of our tab coverage. What I mean by that would just be we have stories just all tabbed up in a browser. We go through them, we make brief mentions, and you can see where they're from. You can go investigate them yourself more deeply if you'd like. But my final reminder really is, if you're newer to this stuff, learn the collar trade, learn that strategy. There's so many ways to do it. It's a way that you can protect yourself without, you do sacrifice upside, but you can ensure your downside. And sometimes that's not the worst thing in the world, that you could leave maybe like 2 or 3% upside for yourself still in the next, say, month, which would be a nice move. And yet at the same time, if you drop more than 2 or 3%, you're protected. That is not the end of the world, right? To have that on during a trying time. If you see some storm clouds appear right now, I don't see them. I just feel that they could manifest themselves quickly and without very much warning. So I honestly prefer, as of right now, if you ask me, I would think this market, if you said there were no election, and other than the international and domestic problems that are there, probably more so international, and they're probably more numerous and intense than is typically the case. But that could erupt at any time. But again, if I assume news neutrality, the way this market's behaving, and how close it is, I think there's going to be another round of rallying, and that they'll probably finish out the year strongly, because usually, even post election, if you assume there is an election, which we were just not doing that, we were saying no election, but even with an election, things start to shape up in the last 6 weeks of the year. You get through that post election, let's say, phase that can be a little messy at times, but then you usually rally into the conclusion of the year in January. In following a presidential election is historically pretty good, is my recollection. So I think that we have data on that, but I don't have it in front of me. So yeah, I would just note all that. I think that's pretty much it, though. I think we can finally wrap up here. I don't think I've got anything else saved here that we need to cover. Let me just double check on that. Yeah, I mean, you can see, like, well, I'll just make this one last mention, but here's the cumulative advanced decline line, on NYSE, and it's just uptrending, right? There's just continues to get better, and it's not pinned at the high right now, but it's acting well overall. Just another kind of quick look at something breadth-wise. It just shows you this is really not, the wheels are not coming off that way. I think it's more about, as I've said, the news potential and this kind of rolling complacency that could catch people off guard. So on that note, I'm going to say congratulations to you if you managed to stay awake. You're one of the few that can do that. And I hope something I've covered this week helps you out in the upcoming week or sometime in the future. I want to thank everyone for tuning in. I want to wish everyone a safe and wonderful weekend, and we'll be back at it next week. And I want to say I'm looking forward to meeting folks down in Miami at our upcoming event next week. So everyone take care. Hope to see you there. And thanks again.